Hey guys, welcome back to my channel. In this video, I will be explaining liquidity. Liquidity is where buyers and sellers have their orders in the market. So a lot of traders trade support and resistance. I don't trade support and resistance because that's not how the banks really move the market. And a lot of times you can get stopped out for only the trade to continue going in a direction that you predicted. Let's look at that right here. Right here, we have a double bottom, triple bottom. Okay, the market comes down here 3 times and bounced off the line. And on the 4th time, some people may have their stop loss here, or maybe stop loss to break even and get wicked out, only for the market to continue going up in the intended direction above these highs. So that does not happen by luck. It doesn't happen by chance. It happens on purpose. What liquidity is the area where buyers and sellers have their stops in the market. When we look at this chart, a lot of people are reading all these candlesticks in the price action, up, down, engulfing, dojis, da-da-da-da-da. However, you have to visualize beyond the data that you see. Within all this movement right here, guys, there's someone in here, or a lot of people in here actually, with stop losses all over the place, trying to buy. Okay, so that is all liquidity. Now, we understand people are trying to buy here, but what do I actually mean by liquidity? Is that there's people in here, like if you go look at an order book, there's people in here where stop losses all over within here. So in here, here. So you may be thinking, well, the market went up, so obviously these people hit TP. Well, first, this is the first touch, right? So in order to see a double bottom, triple bottom, you have to wait until the 2nd and 3rd and 4th and all that stuff. So then there's this spring. So maybe some people actually caught in this spring, which is cool. But then we have here this hard double bottom. So again, some people may caught a 30, 40 pips, and there is people that try to catch only a few amount of pips. But I like to trade long term. I like to catch quick 100 pip moves, right? So there is people in here, or maybe they try to come all the way up here, but it came back down. With that being said, if we know that when double bottoms and triple bottoms are created, why don't we just wait for the spring that's intended to take out all these double bottoms and triple bottoms? Right here, once we have these triple bottoms, then just wait for the spring that's going to take out all these lows, because that's what the banks want to do, and then go up all the way. Okay? And I also have a video on imbalance coming out, if it's not out already, talking about how the market will come and fill spots of imbalance, making this your target, right? So if we look here, guys, I'm on the 1 hour. In 3 hours, you would get 80 pips instead of in here trying to chase 20, 30 pips for the market to just go up and down and come back down and have stop loss to break even, or even get stopped out if you move your stop loss, okay? This method of liquidity and understanding imbalance is called Wyckoff. So you guys can research more about Wyckoff. There's a book called the Wyckoff methodology, but this is a visual representation of liquidity. So Wyckoff is a more detailed schematic, which I'll get to in another video. This is just a 5-minute video on liquidity. What I'm trying to do here is to tell you guys how support and resistance does not work. Maybe someone in here might have a double top, fat stop, and then try to sell it one more time, and then boom, gets wicked out. So I know for a fact that this has happened to a lot of people. If this has happened to you guys, make sure you guys like this video and say, hey, I got stopped out trillions of time. Why is this happening to me? Support resistance, boom, stopped out. What else do we have here? Support resistance, boom, stopped out. Okay, so all this stuff when it comes to support and resistance doesn't happen by accident, guys. It's actually on purpose. So if you know about this, you might as well wait until these springs happen, right? So I'm going to explain more about the Wyckoff schematic, which actually talks about springs and how springs actually work. And I'll go into more detail about the Wyckoff schematic. A plain Jane view of what I like to draw Wyckoff is pretty much understanding that there's double bottoms and double tops and all these patterns that everybody and their mom teaches you on YouTube. And then eventually you'll have a spring that comes out of that double bottom or double top. And then for the market to just go in the intended direction that you want to go in the first place. A lot of times you will see up, down, and sometimes it won't be perfect. But you will see these little schematics looking like double tops, and then big wick up or big wick down, etc. And a lot of people say, well, that's news, which sometimes it is news. And that's the purpose of news. The purpose of news is to push the market in the whatever direction to fill imbalance or have people to hit their stop loss and stuff like that. But you don't want to just blame news. This happens over and over. There's news in all these markets every single day. We trade all these pairs in the world. So you really want to understand where this comes from. So that's it for today's video, guys. I hope this helps you understand liquidity. In another video, I'm going to explain exactly how the Wyckoff schematic works and how to really study it and use it within the market combined with liquidity and balance. So thank you guys so much. If you want to see the videos coming out soon, subscribe, like this video, comment, and let me know what you guys think about liquidity, or if you've ever been stopped out by a spring and it just continues to go in the direction that you're saying. So thank you guys so much again, and I'll see you in